All right, so we got breaking news in the business funding space. This is going to be very important if you're an entrepreneur, solopreneur, small business owner, or just aspiring to access capital to go out and deploy and expand your network to get access to business opportunities and other investment strategies. Major changes coming from the SBA that are going to take effect March 1st of 2026. So if you happen to catch this live or you catch an early version of the recap, you're going to be getting this information very early. This is likely going to be the first source of this information you're going to see. I'm going to be covering exactly who this impacts, why it's relevant, who's going to benefit, and exactly how you need to move to make sure you're on the right side of this policy change, because it seems subtle, but it's actually pretty significant. So we're going to dive into the details. In a second, I'm going to share my screen so you can actually see this information as we go along through it. Very important for you to pay attention. Make sure that if you are somebody who, again, is an actual official business owner, that you're taking notes on how you need to position yourself. So the breaking news is that the business lending space, the SBA is reportedly changing eligibility rules for the 7A and the 504 loan, which I'm going to break down exactly what those loans are, just in case you aren't familiar or don't remember what those loans are, but they are the most relevant for small business owners. This program change, it takes effect March 1st, 2026, and this could significantly impact who qualifies for business funding. Now, it's very important. As a bank, I work with small businesses on a daily basis. I want to break down what changes, who it affects, and again, how banks may adjust to this change coming from the SBA, because the SBA is not the lender, they're the backer. The actual banks are the ones that are going to be making the changes around this. So very important. It's not political. This is capital strategy. So I'm going to share my screen so you guys can see live for yourself that this change is very real. Reports are coming out now. Again, the 7A and 504 loans will have massive changes. This policy removes eligibility for lawful permanent residents, aka green card holders, and prohibits any percentage of ownership by non-US citizens from accessing these forms of capital. This is huge in our current environment where we have so many non-US citizens in the country that are doing business, that are solopreneurs and entrepreneurs. And it's a major change because this is going to change the landscape in accessing capital, the competition behind capital. Like, this is going to be a big deal. So let's look at the bullet points real quick. 100% citizenship ownership requirement. What that basically means is that no percentage of the business is allowed to be held by non-US citizens or green card holders. You have to actually be a full US citizen or at minimum a US national. Green card holders are barred. So that means lawful permanent residents are no longer eligible for 7A and 504 loans. And again, I'm going to go give you a breakdown of what these two loans are. Removal of previous exemptions. So the rules eliminate prior guidance that allow for up to 5% foreign ownership or ownership by non-US citizens. That's huge. Principal residence clause. Owners must have their principal residence in the United States, its territories, or its possessions. Scope. The restriction applies to 7A and 504 loans and other SBA financing. The purpose. The SBA cited a commitment to driving economic growth for American citizens, aimed to ensure taxpayer-backed loans support businesses owned by citizens. This is a big deal. We're not going to politicize this in this live stream. It's not happening from me. This is being covered from a banker perspective, as a business banker who's trying to make sure you're up to date on all things business funding, business capital. So for those of you who need a refresher, I'm going to now share this one with you. And this is going to be going over a real quick scope of what the 7A and the 504 loans are, in case you forgot. So 7A and 504 loans are government guaranteed financing options for small businesses. SBA 7A in particular is a versatile all-purpose loan up to $5 million for working capital, equipment, and debt, while SBA 504 up to $5.5 million is specialized long-term fixed rate loans for purchases of major assets like real estate or other equipment. So this, again, is going to be the two forms of funding most accessible to the everyday Main Street small business owner in America. This is going to be the ones that are usually the most accessible, that have the most flexible guidelines, and are tailored for startups, young businesses, small revenue-based businesses. These loans are the most common. So this isn't being a change being made to some lending program that's, for high finance or big corporate companies. This is directly designed to impact everyday small businesses in America. So this gives you some quick context there. And I'm going to go back here and share this tab again. And then I'm going to just kind of go through my notes for a quick second to give you some perspective on this. So we already talked about what's actually changing. March 1st, the SBA is now only going to be lending to U.S. citizens and U.S. nationals only. Green card holders are excluded. So that's a big deal. 100% ownership must be U.S. citizens only. Again, impacting 7A loan and the 504 loan. Even 1% foreign ownership could disqualify a business. So this is a significant departure from the prior flexibility. Very important to understand that. Who this impacts, let's break it down category by category, all right? Immigrant-owned businesses are impacted heavily that rely on SBA funding. Partnerships that may have any percentage of non-U.S. ownership involved. Minority communities. So SBA has historically supported these segments, and now this is changing. Business planning SBA loans in 2026. This changes future planning. So make sure that you are paying attention to your business. There are going to be winners and there are going to be businesses that have to pivot. All right. So let's look at this from a bank by bank breakdown, because as I mentioned a little bit earlier, the SBA is the backer of the loan. The actual lender is the financial institution. That's where we focus. We're working to focus on bank by bank banking relationships, mastering them so we can get access to capital and other great financial resources to increase our net worth and build a financial legacy. So remember, the SBA loans are originated by banks. So the real question is, how are they going to respond to this information or this policy shift? Large national banks, let's start there. There's a high compliance rate, no doubt about it. Fast operational adjustments, potential pipeline reshuffling, and possibly higher approval ratios for eligible borrowers. We're going to talk about that in a minute. This is where it kind of gets juicy and exciting. What this can change if you are not disqualified from this SBA change. Regional banks, how are they going to respond? Probably more relationship driven, may lean into citizen-owned businesses more aggressively, could increase conventional lending alternatives. This is a big deal as well. I hope you're kind of picking up where this is going. Community banks, some rely heavily on immigrant-owned business borrowers. So that's something that we have to keep an eye out for. Banks that have, heavy demographics of non-U.S. citizen or immigrant-based clientele around them, and are heavily leaning on those businesses being able to access capital, this could be impactful for them. They may experience a significant portfolio shift. They could pivot towards non-SBA solutions. When eligibility shrinks but capital allocation stays steady, approval dynamics can change. This is what's important. So what are the potential benefits? If you are a full citizen-owned business, you could have reduced competition for SBA capital, very important. Potentially faster approvals, because again, there's less people in line. Higher likelihood of funding if previously borderline. So that means that your chances now, because it's not like there's less capital to lend out, but you have a smaller pool. So you have a high supply and a lower demand. That basically means the applicants on the receiving end of that funding now are moving up in the line, okay? Stronger leverage if financials are clean. This is important. We do know SBA is very documentation heavy and documentation sensitive. If you have your ducks in a row, hopefully you have a banker or helping you organize that. If you have your ducks in a row, this could put you in a phenomenal position with the SBA, who again, the financial institutions rather that are putting out the loans that are following SBA's guidelines, because they're still looking to lend. They have to continue to keep the books, stable and growing. So if there's a significant push out of a particular demographic or clientele base they're used to lending to that's off the table and almost overnight, they're going to have to put that capital out somewhere. So if you got your ducks in order, you can benefit greatly. Policy changes create opportunities for those positioned correctly. Get your taxes in order. Get your financial statements. Get your balance sheets, your cash flow statements. Get these things organized, because if you do, the best source of capital is, when it comes to terms and rates, believe it or not, is typically SBA. If you can get yourself in order At a time where banks are going to be thoroughly trying to make up for the lost potential lending capacity, you can end up in a scenario where you're getting prime capital from good banks backed by the SBA to grow and scale your business or your real estate portfolio. So what should you be doing right now? If you're eligible, review ownership structure. Make sure you don't get clipped down in that department. Strengthen financials. We talk about this video after video. We're talking cash flow. We're talking about relationship stability signals. Make sure you have your ducks in a row. Improve debt service coverage. What that basically means is you want to make sure that you have revenues that can satisfy the level of debt you're looking to attain. So if I'm looking to get a $50,000 loan from SBA back, then I need to make sure I have the revenues to cover that comfortably on a monthly basis. So make sure you got your revenue in order. Deepen relationships with SBA lenders. I got this news from a briefing as a business banker from the financial institution I work for that is an SBA-backed lender. You want to dig deep in these relationships. And that's exactly what this channel is all about, teaching you the value of it, because now you see how these policy changes can make your relationship with a bank so much more important. Because now, if I'm not in the right position, I might not even know this is the case. And I can end up needing some critical capital for growth or stability. And I walk in the door and get locked out immediately over something that could have been changed or adjusted in advance. Relationships are key. Prepare documentation early. This is important. I just mentioned, get all of your financials in order. It is going to benefit you later, I promise you. The next thing, if you're not eligible, if you unfortunately fall in the immigrant, non-US citizen category, explore conventional lending. Consider ownership restructuring carefully and legally. Explore state and local programs. They do exist. Consider private capital options. There's a ton of them out there. So again, if you're not eligible, that is about 4 major changes you can make or adaptations you can make to keep your business going, because I want to be respectful to the immigrant and non-US community. They've come in, a lot of them have set up legitimate businesses, and they're filling spaces that and voids in our economy that a lot of us weren't filling or weren't able to fill, whatever the case may be. So whether you agree or disagree, we're not making it political, but at the end of the day, they have been a contribution to this economic system. So this is why understanding how banking policies matter, okay? Capital doesn't disappear, it reallocates. It doesn't disappear. All of a sudden, these policy changes mean they're just not gonna lend this money out. It has to go somewhere. Make sure you're in position for it to go to you. So as we continue to break down bank by bank, one bank at a time on this channel, this is exactly why understanding how institutions deploy capital is critical. This is exactly why understanding how institutions deploy capital is critical, very important. So if you want real-time insights on business funding strategy, I recommend you subscribe. Tune in and stay tuned in so you can get up-to-date benefits, insight strategies, so you can position yourself. As I mentioned, I'm an active banker and financial professional in the field, so I'm getting this news weeks earlier than it's hitting the mainstream and bringing it to you guys. This is the benefit of being tuned into this channel. Legitimate, qualified insights, news, and strategy that is legitimate, legal, and effective. You're not going to get that in many spaces on the internet. So I know this is alive. I got a couple of my people in the building. Let's see. Got my guy PNR. What's going on, PNR Connected? My God, good to see you, man. Anybody else that's in the building, let me know you're in the building. We're about to wrap this up. Any questions, any thoughts from anybody that's in the building that may want to ask some questions while it's available? Just let me know. Anybody that have any questions before we wrap this up? While we're waiting, real quick, if you're new to the channel, I'm a career banker by trade. I handle small business and consumer clients. I have a mortgage license, state mortgage loan originators license, life insurance license, FINRA investment license, and a small business banker. So that means banking and lending needs for small businesses. I am bringing you insights and content that I bring to my clientele on a regular basis that's helping them to increase their net worth and grow their businesses. I have a client relationship book in just deposits of $25 million, investments that's north of $50 million, and business lending that's also in the 7 figures and beyond. So I'm handling this at scale. I'm doing this for clients at scale. And you have the gift of having me on this channel for free. So make sure you like, comment, share, subscribe, support the channel so the channel can continue to support you. Comment down below and let me know if you or anybody around you as a business owner, solopreneur, potential investor, see the changes, see the shifts in this, how this can impact you or people you know, or just leave your views and thoughts down below, whatever they may be. Let's not make this political. Let's keep it focused on our financial advancement angle. So comment down below and let me know your perspective. P&R, my God. Time they are worried about their own. Yeah, I mean, listen, like I said, I'm not going to get too far into the political, social aspect of it. All I'm going to say, as a banker, this is a tremendous opportunity. If you're an actual U.S. citizen, it could be a great opportunity to get capital. To my immigrant, non-U.S. community, I have no grievance here. I would just recommend follow the changes that I laid out for you. There's a lot of private capital, state and local programs available to get you more of the funding that you need. And I recommend the same thing. Build strong relationships with your banks and financial institutions. They need to continue to lend. So if they can find an alternative, they're gonna provide it. So that's all I can recommend for y'all. But P&R, I totally get it. It's a crazy time we're in, man. There's a lot of changes, a lot of shifts. This is it's wild. So I appreciate every single one of y'all. I'm gonna wrap this up. Y'all comment down below, comment on the replay. Y'all make sure y'all go back and comment on the replay, leave a like on the replay, support it, and y'all stay focused. Stay in motion. I see y'all soon.